số mà artist em nói là các bạn là زمايلك.
Welcome back, everybody. We would now proceed with our next session, which is a technical session on state of Islamic fintech. I would like to invite Mr. Timothy Nylander, founder of GP3 Foundation, Netherlands. Dr. Nylander has over 20 years of experience in designing and implementing multi-country partnership focused on global initiative, particularly the UN Sustainable Development Goals. With an emphasis on SDG 17 partnership, he advises development finance partnership in sectors such as health, education, energy, agriculture, and disaster. Dr. Nylander serves as an advisory to risk pools, including the African risk capacity. We welcome on board, sir. Next, I would like to invite Mr. Khairul Anwar bin Muhammad Noor, the Director of Masraf Advisory, Malaysia. Expert in Islamic finance with a distinguished career spanning Malaysia and the Middle East as the principal and co-founder of Masraf Advisory, a Kuala Lumpur-based boutique Islamic finance consulting firm. He plays a pivotal role in delivering Sharia-compliant financial solutions. Welcome on board, sir. Moving forward, I would like to invite Mr. Srinivasan Chalapati Sampangi, Executive Director, Commercial Solus Insurance Brokers, DMCC, UAE. Mr. Srinivasan is a qualified insurance professional with an extensive general insurance and reinsurance experience over 30 years. He is currently the Executive Director of Solus Insurance Brokers DMCC in Dubai. He handles reinsurance, treaties, product conceptualization, and general insurance businesses of Solus. Besides being an aviation specialist, he has published insurance-related articles and is a regular keynote speaker at insurance summits and conferences. We welcome on board, sir. Last but not the least, I would like to invite Mr. Rustum Raghmatov, CEO and founder of Iman Holding, Uzbekistan. Mr. Rustum is the founder and CEO of Iman Holdings and U Companies, an ex-investor banker with extensive experience across Uzbekistan, Luxembourg, and the US funds. He worked at the leading consulting and investment firms like EY, EFG, and IFC, World Bank Group. Mr. Rustum was also involved in advising startups in fintech, investech, e-commerce, real estate, and many other boards in the local and market and abroad. We welcome on board, sir. I would request Mr. Timothy Nilender to please come and share the stage with me.
Assalamu alaikum. Excellencies and distinguished guests. My first words of Arabic, these were those words I learned about 40 years ago when I first started working in the Hashemite Kingdom in Jordan. Working with children actually in wheelchairs with disabilities, teaching sports. That was my first introduction to the region and my first opportunity to serve in this region. It's been a very happy and interesting relationship these last 40 years. My love for the culture and people here goes quite deep based on that experience, and it's with humility that I'm grateful to be here to contribute to this interesting subject matter, the state of Islamic fintech. A few times in your life you get to be at the start of something and to see something emerging with collective ideas and creativity of humans working together to solve or address human challenges. And I think what we'll hear today from distinguished panelists are we're really at the start of something quite remarkable, which can go to help many of the development challenges for excluded communities and individuals globally through an attitude of cooperation. My wife and I are grateful to be here. We set up a foundation in the Netherlands called GP3 Foundation. This stands for Global Public-Private Partnerships, and the work we do serves the World Bank, Asian Development Bank, and others, trying to help create cooperation mechanisms for countries, including in a program for Takaful and Retakaful that Al-Huda is helping us design for an African disaster insurance program to try to protect vulnerable populations against climate disasters. So it's great that we can be here and work together. We know that the advance of cell technology, satellite tech, the internet and other items are allowing greater access and connectivity right across the world. And this is a great equalizer in some ways where the access is there to the types of information and the types of services which maybe 10 or even 15 years ago were simply not available. We've seen the rise of mobile wallets, other types of opportunities to link to the farthest corners of countries and communities that are rural in nature, for example, or have been otherwise excluded for various reasons. We know that fintech can help with that, and many of our programs are related to getting money or resources to that last mile, to vulnerable populations in the last mile that are either excluded from typical financial systems, from access to education, health, disaster response, the types of social safety nets, and to look at how those systems can also help with diaspora finance, to bring money home to communities, as diaspora finance for many countries is one of the largest sources of revenue coming from external, certainly larger than foreign investment. So with those few words, we're going to now hear from our panel members. First of all, Mr. Khalil, and learn a bit about what is the state. And I think what we'll hear today is it's exciting because it's at the beginning, and a system like this can be put in place which is culturally and ethically responsible and thoughtful for a region such as this, without importing the traditional ideas that other regions, maybe from the West or the North, have their own views of these things. What we really like about fintech opportunity here is the ethical base on which it can be built. So let me turn it over to Mr. Cliff.
Assalamu alaikum wa rahmatullahi wa barakatuh. His Excellencies, ladies and gentlemen. First of all, I'd like to thank alhudacibepk for the invitation, and I hope we can see more of this event going forward. That's about myself. I was in this region for about 14 years. I was with the Emirate Islamic Bank I was with Al Hilal Bank in Abu Dhabi, and I was also with RRG Bank, all in Islamic finance. And currently I'm the Shara Committee for Aeon Bank, the digital bank, as well as AIA Takaful. This is something about Masrif that I want you to know. Is a leading boutique Sharia advisory firm, Islamic finance advisory firm out of Malaysia. It's founded by me and my partner, also a banker. We have over 100 projects that we have done over the past 6 years, and more importantly, at the bottom, we are awarded as the best Islamic finance consultancy firm in 2024 by IFM, which is Islamic Finance News. These are some of the works that we have done. One is with Aeon Bank to help them to secure digital banking license in Malaysia. Sunline is a Chinese core banking system provider. We help them to develop the Islamic finance core banking system requirement and testing. Venture Tech is asset or fund management company, a PE company rather, that helps to finance or rather to invest in small tech companies, including the health tech, fintech, as well as bio. C-Money, Public Islamic Bank is one of the largest banks in Malaysia, and we help them to develop Islamic banking products. So these are some of the credentials that we have. And now I just want to dive into the topics that I wanted to discuss today, which is fintech as an alternative to Islamic banking. Yeah? This is the slide is not here, so I have to actually turn back and look at the screen. This is why there is a need to have fintech as an alternative to banking. Number one, fintech is an alternative to banking. Number two, fintech is an alternative even to Islamic banking. Yeah? Why it is relevant? Because based on the study that was done by Dina Standard, 69% of rural population in OIC countries are underserved or without access to banking products. 1.4 billion people in the world, Muslim and non-Muslim, are unbanked globally. Sharia compliant varies. Okay, on the regulatory side, that's on the population side. On the regulatory side, being an ex-banker, I know very well that it is very difficult for the traditional bank to go to go very fast into this fintech because of the regulatory requirements, the mindset of the bankers. So what is important is there is a need for us for fintech or someone to be able to cater to the market. That's why it is very important for fintech to be there to cater to the needs of those who are underserved. Look at the legacy system. One of the other things that I learned being an ex-banker is that in most banks they have this legacy system. They have the core banking system. The core banking system will be good for the traditional bank, but for digital and for fintech, it will require a much more thin and not so heavy system. So that's why it is important for us to look at fintech as an alternative to be able to cater to this segment. Additionally, what is very important is also from my observations, looking at Indonesia, looking at some countries in Africa, the reach of fintech through the fintech infrastructure enables people to have faster and greater access to banking and finance products. For that reason, it is fintech will be the one that will be an alternative to banking. This is also another data that we managed to have, like what Zubair mentioned this morning. Total of Islamic banking assets in 2022, about 3.2, now is about 4 billion, like what was mentioned this morning. Yeah? And but if we were to look at on the right side, other Islamic financial institution asset is only 167 billion. So there's a tremendous opportunity for other Islamic financial institutions, which refers to fintech, to be able to cater to the market. Growth of Islamic banking asset is 13%. Growth of OIFI is only 6%. Why? Because it is still a new technology. And I'm sure, based on the involvement that I have over the years, this will be growing very fast. Yeah. This is another slide to show that OIFI is very critical, or rather other Islamic financial institution is very important in the development of banking and finance products as an alternative to banking. Yeah? And this is what, I'm from Malaysia, but this is what actually came up from ICD report that says that Malaysia relying on fintech to further develop its Islamic capital market and spur innovation. Even in a country like Malaysia, where the banking and finance system is very mature, it's very robust, it continues to be very dependent on fintech to grow the market further. And they come up with different initiatives. The number 2, look at Labuan FSA, Labuan Financial Services Authority, which is also another authority in Malaysia. They very much focus on fintech. This is among the initiative that is covered by Labuan Financial Services Authority. And what they want to do is to create Labuan as an Islamic Digital Asset Center. We call it IDAC. So a lot of initiatives is done by LFSA to promote the place as IDAC. Why it is called IDAC instead of Labuan IDAC is because they want it to be a place for the global players to come in and not to only focus on Malaysia. What they have created the Sharia compliant digital exchanges. There are 4 Sharia compliant digital exchanges. Islamic Digital Financial Market, including Islamic Digital Bank iBox. And on the social finance, they also created Ummah Link Company for basically to focus on Islamic wallet. Yeah. I want to now share with you some of the works that we have done to show that how fintech can actually help to promote the market, help to promote Islamic finance. The first one is ChocoUp. ChocoUp is a company from Hong Kong, actually. Even though they are from Hong Kong, they are very keen to do Islamic finance. Of course, in Hong Kong, the offering is actually currently conventional, but they come to Malaysia, Singapore, and probably they'll go to Indonesia to offer ChocoUp as an Islamic alternative. Why they call it ChocoUp? It comes from the word chocolate. So the chocolate will boost the energy of the companies. What ChocoUp does, they provide financing to small businesses by looking at the cash flow of the small businesses. So ChocoUp, what they offer is actually revenue-based financing, as opposed to the traditional funding via debt. Yeah, so this is revenue-based financing, and from Sharia perspective, we actually structure this based on a wakalah model. So flexible repayment by the SME to Choco Up is actually based on a percentage of their sale. So basically what happened, the customer and Choco Up will agree that for the next 10 months, for the next 12 months, this will be the expected sale. So from this particular sale, Choco Up will invest a certain amount of money and would expect a certain amount of return over the period of that 10 or 12 months. So this, number one, is already very Sharia compliant. Number two, it takes away the headache of the SME to come up with their financials. It also takes away the headache for Choco Up to also look at the financial statement, because these are all SME, they may not have the full financial statement, but they do have their bank statement, they do have their annual sales or monthly sales statement. So that's what it is. This is what I mentioned. If you look at the traditional funding structure, every month customer will have to pay a fixed amount, but through Choco Up, the amount to be paid is actually based on actual cash flow. Yeah. So this is the Sharia compliant structure that we devised for them. I can skip this. But I just want to highlight that Choco Up study and understand the cash flow. They put in place a mechanism to ensure that they can digitally monitor the sale, because it's also very important to make sure that they can monitor the sale and they can secure payment from the SME. Yeah. So again, by doing this, they provide that chocolate, they provide that boost to the SME. Yeah. Okay. The second case study is Light. Light enables customer, including influencers. So influencers, they do get paid after 3 months. They do not get paid on time, right? So what Light has done, they actually sort of do a factoring of the income of the influencers. So this is also applicable to real estate agents, for example, those that are commission-based. So this is another alternative, or rather another example of real-world alternative that can be achieved in order to, because bank will not do something like this. Bank will not do Choco Up. Bank will not do something like this. Yeah? Again, this is the financial structure. We can skip this. Again, commission advances for influencers, for property agents, many more. Hariwang is actually the earned wage access, where basically instead of waiting for the salary to be paid month end, Hariwang will come in and provide early wage access to the employees. Also a very good initiative, particularly to help those that are in need of short-term money. Because if you look at, particularly now in gig economy, if you look at the riders, for example, the riders to deliver food, to deliver stuff, it is very important for them to be dependent on their motorbike or to be dependent on their car. So sometimes they need to have a certain amount of money, 400, 300 dirham, 500 dirham, just to fix the car, but they cannot wait for the salary to come. So that's why this earned wage access can help to solve this problem. Again, another product that bank will not do. Yeah. So it improves financial wellness. It reduces reliance on predatory lending. This is very much consistent with the ESG requirement on the S part and on the social part. Again, the Sharia. And we also have funding society. Funding society is P2P financing, peer-to-peer financing. It is licensed by Securities Commission of Malaysia. They do thousands of transactions a month. So now it is a unicorn funding society. But what it does, again, it helps connect the SME with investors through online marketplace. Again, something that bank typically will not do because it involves SME. The SME without the normal documentation that banks are familiar with. So I want to, before I close the talk, I want to also go to one of the initiatives that we did that was very attractive, which is Taishan. Taishan is basically a token. This is a token initiative based on real-world asset, where people who want to invest in ceramic, old ceramic, 2,000 years old ceramic, 500 years old ceramic from Sung Dynasty, Han Dynasty, Ming Dynasty in China. This is very big in China, in Malaysia, Singapore, to be able to get people to invest in ceramics. You will not be able to get one big ceramic if you are a retail investor. So what it does, it tokenizes the ceramic into smaller ticket size, and people can actually invest in ceramic through the token. And again, I mentioned earlier about the digital exchange in Labuan. So all these tokens are being bought and sold at one of the exchanges in Labuan. So one of the exchanges is Greenbank is the one where Taishan is listed at. Yeah. So yeah, I think those are the real cases that I can share with you. But due to limited time, I just have to drive through very fast. Yeah. But we can certainly discuss it later. So among the key takeaways is with technology. Technology expand access to underserved market, even in Malaysia, in Africa, in Indonesia, for example. This has helped a lot in terms of getting people to have access. It drives innovative and value creation. It strengthens risk management process and fosters connection between users and investors. So it's going to be there, it's going to be an alternative to banking, it's going to be an alternative to Islamic banking. With that, thank you very much.
Thank you very much, Mr. Kuhn. Our next presenter on the topic of consumer adoption and awareness of fintech products is a friend I met last year at one of the Alhuda conferences, or earlier this year, Mr. Srinivasan, Executive Director of Solus Insurance Group. Please, sir.
Good afternoon, everybody. Okay, sorry. With the interesting thing about Islamic finance should be with the background of what is the Islamic population in the whole world. The Islamic population in the whole world is nearing 2 billion. And they're almost 25-26% of the total planet's population. That means that is the size of the market which we are talking about. Fortunately, unfortunately, the more interesting thing is about most of the people are either the below poverty line or they are the lower income brackets. Whenever we talk about any of the disruptive practices, we are only talking about those people who are in the cities. All disruption is happening for the city folks. But the largest population stays in semi-urban and rural areas. The disruption doesn't reach there. This is the biggest factor where the disparity will always remain. I'm a big advocate of mass products. I have worked on a lot of insurtech products and microfinance, micro-insurance, which are designed to reach the masses. So with this topic, I wanted to put forth some of my points. So I want everybody here present to have that trust in the Sharia laws which have been created to create a just society. I think if everybody has that sort of a trust and they follow the riba principles, they follow the mass prosperity, Islamic products will have a excellent spread and excellent reach. Excellent reach to the masses. So there are so many strong principles in the Sharia which gives an advantage to every common person who can practice it. So the whole idea of bringing fintech is to create a mass base. So before I go into my subject, I just wanted to touch upon what Solus is all about. I represent Solus as their executive director. We are an aviation specialty broker, and we are very strong in aviation in the Central Asian market and Africa, Middle East. We do 360 degrees of aviation insurance. So that means right from commercial aircraft fleets to ground operations, liabilities, everything is covered by us. And along with that, we do reinsurance for our insurance clients. So just want to run through my slides of what Solus is all about. We do surety, we do bonds, we do financial lines and insurance, we do insurtech, we do micro insurances. So our spread, if you see, is mainly into Central Asia, Africa and Middle East. So we are one of the largest brokers in Central Asia, in Kazakhstan, Moldova, Armenia. We are very strong in Afghanistan, and we are spreading quite well. Now coming to the topic. So I started with the Sharia principle, and somewhere I always see that we started in the wrong footing. That we started talking about the city masses first. And when we do a product for the city masses, we make it more urban style, we make it very complicated, we bring in a lot of jargons. So those who are literate have the access to these products, and the masses are deprived of that. So when you talk about fintech, we should always talk about principle of large numbers. The larger the base is, the larger the reach is. The larger the reach is, the more prosperity will come. So when we talk about fintech, we are talking about coming out of the grey market to the white market. Cash has to reduce and online banking should happen. This is the core principle of how elevation of poverty and reach of products will become better. If you do cash transactions more, especially if you see in the rural areas, the cash market is very strong. That means the black market is going on well. Some are profiting big time out of the poor people. You do a cashless transaction, government has a better grip. Government welfare schemes should reach the people, and the distribution of wealth will be much more better. So, when I spoke about trust, the whole idea of building up a fintech, it should be on how we trust our clients. Because if you today you see the banking, the conventional banking does not trust its own customers. They have so much of difficult procedures. Our money, they enjoy it, but they have procedures which are very, very complicated. So fintech came as a solution by disrupting conventional banking, but somewhere we again went into the same jargon story. We made it more complicated for common public to use it. We may be having apps, but how many semi-literate or illiterate people are able to use the apps to make benefit out of it. Banking, if you see, are mainly into two things. One is deposit of money, one is taking loans. So if a poor man is not able to take a loan out of a fintech solution, there is no meaning in doing that. So in category of fintech, basically we are talking about crowdfunding, payments by e-wallet and UPIs, remittance. Tech is basically regulatory disruption, so that we bring in changes in the regulatory pattern. There are a lot of Islamic countries who still adopt to conventional regulatory practices, so they will never allow the Islamic options to grow well. Then we have InsurTech. I'm an insurance guy. I'm a very strong proponent of how InsurTech should reach the masses, and especially on the personal and products. Then we have robo-advisory, that is chatbot-based solutions where we have more access to people with maximum information available on fingertips. And cryptocurrency. There is a little different topic and very wide discussion to be made on this. But if you do the crypto in the right way, this can be a very strong regulated alternate currency market. So when we talk about crowdfunding, it should be on the principle of equal distribution of business. The principle of Sharia has a very strong leaning towards very, very trustworthy and clear business dealings. So crowdfunding, when you do, the money which will come to the fintech companies should also go back to the needy people. That's how the economy grows faster. So as I told, if we talk about 2 billion population and